Hello, everyone. I'm Jamie. I'm a research marketing manager here at Morningstar. I would like to start off by welcoming everyone and thanking you for joining today's webinar, Fund Managers by Gender, the Global Landscape. As you know, Morningstar recently published a research report on this topic, and today's webinar will be led by the two authors of the report, Madison Sargis, quantitative analyst on our quantitative research team, and Laura Lutton, our North American practice leader for our manager research team. Madison and Laura will speak for about 30 or so minutes, and then we will devote the rest of our scheduled hour to answering your questions. You have the ability to submit your questions through the Q&A panel on the WebEx interface, and we will get to as many questions as we can in our allotted time this afternoon. So with that introduction, I will now hand it over to Laura and Madison to get today's discussion started.
Thanks, Jamie. This is Laura Lutton. Appreciate everybody joining us today. We're going to talk about our study that we released last week, Fund Managers by Gender. And we're going to move through the deck here. Hopefully everybody can see the slides. Just in terms of agenda setting, we're going to start with some background about that led up to the study for this year. Then we're going to review some of our findings globally as it pertains to women fund managers. Then Madison's going to walk us through the methodology that we use to generate these results, which is an impressive quantitative display. That's her specialty. And then we'll go through some of the key takeaways that we found, particularly through the quantitative work. So moving now to slide 3, I just wanted to spend a little time laying the groundwork for the study that we released just last week. So Morningstar is very committed to serving women investors, and the research that we released last week was actually preceded by a second study, or a first study that we did in 2015. And the genesis of that study was really came out of Morningstar's Women's Initiative. I'm one of the founders of that group, and we're an internal employee research group, or employee resource group, rather, that's committed to helping women advance their careers here at Morningstar. And about 2 years ago, we were having a strategic planning meeting, and we said, you know, we shouldn't just be looking internally at helping women. We should also be looking at how we can help women investors, because investors first is one of Morningstar's key corporate principles. And if you're familiar with some of the challenges that women investors face, there's certainly work that Morningstar can do to help. And that goes for helping individual investors women investors who often are less familiar with financial concepts, all the way to professional investors, women who work in the fund industry in particular, which was the focus of this study. So we decided to take a look at professional women investors, and to look at their portfolios and see what we could learn from that. And we started with a study in the U.S., and we knew that there were fewer women in the industry than men, just based on our anecdotal research over the past 30 years or so. But when we started counting, we found that the numbers were even smaller than we expected. We found in our 2015 study that about 1 in 10 women, or 1 in 10 fund managers are women in the U.S. market. The numbers are a little bit better in 2 other markets that we looked at last year, Spain and Hong Kong. But we uniformly observe that we have a weak job pipeline for women who want to advance in this industry, and that's based on a look at things like the Chartered Financial Analyst designation, which is often a precursor for a woman being named fund manager. Or we also looked at women in MBA programs, for example, and we find that in those cases, women are far less than half of the classes of CFAs and MBAs, and that presents some challenges just in terms of the leadership pipeline. We also observed in our 2015 study that women in the fund industry are underrepresented relative to other industries that require similar education or have similar compensation profiles, like lawyers, doctors. We looked at accountants, and in those 3 professions, women are better represented than we see in the fund industry. So there's some work to be done to get women on an even keel with men, and we think this is important because we also looked at the performance of funds by their leadership, and we found that when we looked at funds run exclusively by men, exclusively by women, and also looked at mixed gender teams, it was those mixed gender teams that had the best performance. And we think that's a nice nod to diversity, and that by broadening the voices at the table, making investment decisions on behalf of all of us, we see some signs of better results. And we're going to talk more about some research that we have planned looking further into performance. But from there, I'm going to move on to slide 4. And we will start looking at some of the results that we found in this year's study. So we started out by looking geographically at fund managers for this new study, and we looked across 56 countries, and wanted to see what the gender balance was between men and women. And we found that the trends that we saw in our 2015 study on a limited basis in the U.S., Spain, and the UK are actually pretty consistent with the global scene. So women are very underrepresented. They're represented relative to those doctors and lawyers, and that we mentioned in our 2015 study. And we also observed a pipeline of CFAs that is not sufficient to support gender equality in the fund industry. So on slide 4, we're showing you some of the countries that scored the best when we looked at gender equality across those 56 countries. So the global average of funds with at least one woman manager is about 12%. So all of the countries that you see on slide 4, Singapore, Portugal, Spain, Hong Kong, and France, are all well above that global average. And one thing that we would point out, or one observation that we made as a result of this work, is that these are all countries where the fund industry is growing pretty significantly. These are places where we think the opportunity set for women is expanding, and that's true even though we controlled for growth of the industry, age of the manager, and so forth. And Madison's going to get into some of those methodology details a little bit later. But these are all encouraging rates relative to the global norm, and although still I'll point out, when you look at the data in the middle 2 columns with the lawyers and the doctors, the women in the fund industry are scarcer than we're seeing in those other professions. So on slide 5, you'll see, slide 5, let's move to slide 6 here. Slide 6 shows you some of the data around the countries that were below that global norm of 12%. So that would include a lot of countries where the fund industry is very well established, including the United States, which had a 10% average. So this is consistent with the data that we saw in the 2015 study, even though we included ETFs in the 2016 study. In the 2015 study, we were only looking at open-end, those traditional mutual funds for our study. Other countries with numbers that are similar to the U.S. would be Canada, Australia, New Zealand. Again, well-established fund industries in those markets. Germany, Brazil, and India trail the U.S. with an even scarcer percentage of women fund managers. So these are some countries where women have not made as many gains, and that's particularly true, again, when you compare to other professions. Let's move on to slide 7. So one of the other discouraging things that we found when we were looking at this data by geography was the trend over time. So one of the significant differences between this study that we did this year versus last year's study is the 2016 study was far more comprehensive because we were able to study trends over time. When Madison was assembling her data set for this study, she went back to 2008. That's when Morningstar's global data database, which includes manager names that we were able to study, is pretty firm. And we studied what happened between 2008 and December of 2015. And we found that in many cases, the rate of women managers has actually decreased. And this was somewhat of a surprise to us because we're familiar with many programs that large asset managers have hosted at their firms to help promote women. There's been a lot of attention to women in leadership on corporate boards globally, a lot of coaching on women in advancing their careers from authors like or books like Lean In and other movements. So to see that women are actually less represented in this industry is somewhat disappointing. And you'll see that that was definitely the case in countries like the U.S., for example. Switzerland, Australia, New Zealand also saw declines, or Australia and New Zealand actually improved slightly, but those other countries we saw a slight decline over the years. There is some a hopeful trend in the Australia-New Zealand region as well as in South Africa, but for the most part we saw a decline globally, and that's a point where we take pause. So from here, I'm going to hand it over to Madison. She's going to talk a little bit about the next phase of our study, where we looked at funds by attribute, as well as some of the details that she assembled to make this study possible. So I'll hand it over to her.
Thanks, Laura. So what you'll notice in the first half of our study is that we're really trying to understand the state of gender diversity within the fund industry at a pretty macro level by looking at different countries and looking at comparable professions. And so what we noticed when we first started studying this is that certain countries and regions had far higher rates of female portfolio managers than others. And so when we were thinking about this, we thought, well, maybe there are other meaningful differences that we can uncover. So we started to look at differences by fund type, firm type, and different manager traits. And so the way we did this was creating a data set including over 26,000 managers from January 2008 to December 2015. And since we're trying to understand a manager's gender, male or female, we're going to use a logistic regression, which tells us the relative likelihood of a fund being managed by a woman given a certain trait. And so if men and women were equally likely to manage a fund, we would see that the odds are 1-to-1, and our output will tell us, how far those odds change. So now we're going to walk through an example in detail, because we know that logistic regression is new to some of Morningstar's research, so I want to make sure we explain this well. So we know that there are more men in the industry than women, so what this methodology allows us to do is to see relative to the proportion of men and to the proportion of women, are certain funds more likely to be managed by men or women? And so when we look at socially responsible funds, if men and women, manage these in equal proportions, we'd see that those odds would be 1-to-1. However, what our data tells us is that that's not true, in that women are 24% more likely to manage an SRI fund than men. And that's indicated by that yellow bar. And so this is going to be the way that we show our results moving forward. Here we put a summary slide of what we think are the key takeaways. We're going to walk through each in detail, but we wanted to give this to you so you could have all the high-level takeaways on one page. So these next two slides that we're going to walk through help us understand how and what women manage, and if there's any differences between what women manage and what men manage. And so one of the first characteristics that we looked at was active and passive management. So are women more or less likely than men to be, picking those stocks and bonds, or are they going to be having to follow a set of investment rules and portfolio construction? And so if men and women were equally likely to manage an active fund, we would see that the results would be 1-to-1, which is all the way over on the right-hand side of that chart. But we see that our data shows is pushed over to the left, in that for an equity active fund, women are only about, the odds are 0.64 to 1 that a woman's going to manage that fund. So that tells us that women are about 36% less likely to manage an active equity fund than men. And so another way to think of this is that if women are less likely to manage an active fund than men, that means they're more likely to manage passive funds. And so coincidentally, passive is a big growth area of the industry. So this is, we think, a promising trend for women. The next basic fund type that we looked at was fund-to-funds. So are women investing in stocks and bonds, or are they investing in other funds? And is this more or less likely than men? And so for equity and allocation, we see that through time, women have generally been more likely to be managing funds. So fund-to-funds, so investing in funds that buy other funds. And when we look at fixed income, we see that trend has steadily increased towards positive areas. So we see since 2008 that generally women are more likely to be managing fund-to-funds than funds that invest in individual securities. And so one of the next two slides that we're going to show was we wanted to understand if there's any differences in leadership between men and women portfolio managers. And so a couple of ways we could look at this was by looking at team-managed funds versus solo-managed funds. And so when we think of a team-managed fund, we see that portfolio manager is sharing responsibility across a group of people versus owning that fund on their own. And so for equity and fixed income funds, we see that women are more likely to be managing a fund that's a team-managed fund versus a solo-managed fund. And on the flip side, for allocation, we see women are more likely to be managing an allocation fund on their own than on a team. So, we see again in this equity and fixed income where, women are investing in individual securities on their own. They're more likely to share that than men. And so the second way we wanted to proxy for leadership was by looking at the total number of funds that men and women managed. And so again, if men and women were equally likely to manage an additional fund, we would see that those odds would be over on the right-hand side at 1-to-1. But for each asset class, there's a small but pretty meaningful difference that women are slightly less likely to manage an additional fund than men. And so this is pretty interesting for us. So even those women who, have proven that they're qualified and have risen the ranks to become a portfolio manager are still managing a fewer number of funds than their average male peer. And so this was a pretty disappointing finding for us. This is something that we definitely would have preferred to see that there'd be no difference.
Yeah, and maybe I'll just jump in here. I think we take this as this lack of women being named to multiple funds as an indication of leadership in the firm. So, it's not uncommon, especially among actively managed mutual funds, for the chief investment officer, for example, or a sector leader to be named across multiple funds. Sometimes that person is more of a, big picture decision maker than a day-to-day manager, but that's often an indication that individual holds a lot of clout in the firm, perhaps is capable of attracting assets to those funds based on name recognition or reputation in the industry. And so the fact that we don't see as many women in that position as men, we take that as a sign that perhaps women aren't getting those upper leadership positions in firms in addition to the fund management roles.
Thanks, Laura. So then, that leads us to the question of, why should investors care, about, the lack of, women portfolio managers in the industry. And so we're going to show you some results that we found that suggest that, this is an important issue and there are some tangible, benefits for investors. So looking at the next slide, turnover ratio. So what we're looking at here is the likelihood of a woman managing the highest turnover fund in the category relative to the lowest turnover fund in the category. And so that difference is pretty drastic. Women are far less likely to manage that high turnover fund than the low turnover fund. And so what this data tells us is that women are more associated with funds that have lower turnover ratios. And so this finding actually lines up with other research that's been out there, since the early 2000s, that women tend to hold on to their investment positions longer than men. And so this is, this has pretty tangible benefits for investors because we know that turnover ratios, lower turnover ratios lowers costs, and lower costs can be passed on to investors in terms of lower fees. And so the second reason we think investors should care is women portfolio managers tend to be more credentialed in equity and fixed income asset classes than their male peers. So we're looking at the CFA, and we're using this as a proxy for higher education. And so we see that for women to become a portfolio manager, they're more likely than men to have that CFA, to have gone through that rigorous exam. And so, we view this as that women tend to be a little bit have to be more credentialed than men to manage funds. And so if you're looking for if you're an investor looking at a fund to manage or looking at a fund to invest in, you would tend to like to see that portfolio manager has more education, has gone through that exam. And so these last two slides that we're going to walk through are really trying to get at the question, where are women in the industry? Where do they manage? And so we find that women are far more likely to manage an equity fund than a fixed income fund. And when we specifically look at equity funds, we find that women are more. We find more women at the largest equity firms. And this makes sense. Larger firms have more funds. They have more portfolio management opportunities. So we've listed here, 5 of the largest fund companies and their percent of women portfolio managers. And so you can see that American funds and Franklin Templeton are about 14%, which is higher than the global average. We found that Aberdeen Asset Management is actually the fund company that has the highest percentage of female fund managers at about 30%. This actually lines up with, in the media, they've done a big push on promoting women and getting more women into their firm. So we thought these were some interesting fund companies to look at. And then finally, we looked at socially responsible fund to bring this full circle to our example from the beginning. And so we know historically that socially responsible investing has been championed by women. And so when our study starts in 2008, we see that women are far more likely to be managing these SRI funds than men. However, when we look to today, we see that, there's still positive bias towards women managing these funds, but it's gone down. And so we think that, as SRI funds have become more mainstream and more popular, more men have entered the industry to start managing these funds, which pushes down that likelihood. So in areas where women used to be more dominant and have more roles, we see that has started to shift towards men. And so those were some of the key takeaways from this study, and we find that by doing this study, we still have a number of questions that we are interested in researching. And as Laura mentioned, performance is one of them. We want to take a deep dive into that, and we think that this study can help shape that paper, because we know, if women are more likely to manage passive funds, generally we would see, passive have lower costs, so that might influence our performance study. And we're also interested in compensation differences, as well as hiring credentials or style biases.
Okay, so that ends our prepared remarks. And we're happy to take questions that you can include, or you can type in the Q&A panel in the WebEx. And I do have a couple of questions here. The first one's for Madison. Tell us a little bit about why we didn't look at performance in this particular study, or sort of how you would go about studying that in the future.
Yeah, so we didn't study performance in this particular paper for a reason, because we didn't really understand where women were positioned in the industry. And so we didn't think we could conduct a really comprehensive performance study without understanding, the types of funds that women manage. And so, when we hope to do a performance paper, and when we do, we want to make sure that we take into account some of these structural biases, such as passive funds, turnover ratio, team managed funds. So we want to make sure that we control for all these variables to make sure that we can see if there's a true performance difference by gender.
Okay, and then we have another question that's just come in here. One of our listeners wants to know if we've found any evidence that fund companies are encouraging or have maybe suggested that women managers get into fund management by going into a passive fund rather than an active fund. And I can say I don't know that I've observed that. I think one of the things that Madison and I talked about when we were working on the study is, the active manager's role and the passive manager's role is really different. Passive managers, their objective is to match an index, and they do that using quantitative methods and by trading in the markets to mimic the returns of the index. And that's a far different assignment than running an active fund, where you're choosing either individual securities and constructing a portfolio, or choosing other managers in a fund-to-funds kind of context. So I don't think that we're seeing cases where women see less opportunity in active and then therefore go over and run a passive fund instead. I think the skill set's different. But I do think that one of the surprising things about the study was the consistency that we saw of women making advances in areas where the industry is really expanding. And we've seen this rush of assets towards passive strategies, and subsequently, a lot of new funds being introduced. And, even as the industry has grown, women are getting a bigger piece of the pie from a management perspective than they are with active funds. So, that's a great opportunity for women to benefit from that growth in the industry and the asset growth as well. And, we're excited to see some progress there. So another question we've gotten in is, maybe I'll let Madison answer this first. What surprised you about the results that we found?
I think the most surprising result was some of the initial takeaways that since 2008, the rate of female fund management has not improved, and it's actually decreased in many markets, especially as you see a lot of the media popping up of firms touting that they're trying to promote women and promote gender diversity. I was really surprised to see that rate decline since the financial crisis. I think that's the biggest surprise for me.
Okay, another question we just received. Do women portfolio members tend to put together more diverse teams? That's a great question, and I think, one of the findings from our 2015 study, and one that we observed in this more recent study as well, is this trend towards team management and women being involved in managing funds on teams. Like the explosion of passive funds, we've also seen a big trend toward team-managed funds, and women not only tend to be finding more opportunity there. We may see, when Madison does her deep dive into performance, we may, see some support of our 2015 studies that diversity is better. So I do think there is evidence in the data that where we see women being named to teams, those teams are more diverse. So that's encouraging, and I think diversity is encouraging. And Madison just mentioned this decline in women being named managers to funds since 2008. I think it's worth noting that over the period that we studied, active funds in particular have really struggled to perform. And so as the industry has become more homogeneous from a gender perspective, returns have not kept up by and large, particularly among equity funds. So I think, if things were going well with the status quo, that would be an argument to keep it that way, but I think that there's definitely room for improvement, and that's another reason why we're interested in diversity in general among mutual fund management teams. One question that we've gotten here and in other places as well is a question about why aren't there more women in the mutual fund industry? And, this is a question that here at Morningstar we're not as well positioned to address because we're observing the industry from the outside. So we have at our disposal, tens of thousands of funds that we study globally and the managers assigned to them. But what happens leading up to that manager being named is not as transparent to us. Though I would say as part of our research, we did a lot of reading of academic literature and recent studies on this topic. One I would point to that came out earlier this year from the consulting firm Oliver Wyman looked at some survey data of women in the industry, and they complained about things like lack of career transparency in terms of what the path would be to leadership, some concerns about compensation and so forth. I know this is an area that the CFA Institute has been working hard to address, and they've been doing a lot of work internally around how to attract more women to their program and perhaps dispel some biases around Wall Street being a greedy place that perhaps women might not be as interested in working, particularly relative to some of the other professions that we looked at, like the law and medicine. I would also say that relative to those other industries, professional industries that we studied, fund management's pretty small and not something that women perhaps grow up knowing what that is. Whereas, we all have experience with doctors and perhaps attorneys. We see them on TV and so forth. So it's good to see that the industry is getting to the bottom of some of these questions. And as Madison mentioned, we're interested in studying some of the things that were anecdotally raised in that Oliver Wyman study around compensation and so forth on a go-forward basis. So I think we have time for a couple more questions. Another question is, what can the industry do to attract more women to the asset management industry? And that's a tough one for us to answer, kind of from where we sit. But as I mentioned, this is a pretty small industry, and it's good to see that folks like the CFA Institute and others are out discussing their work around the profession with MBA schools and so forth. And so I think that's helpful. I think that we'll probably see some strength continue to build in areas where women have gotten more traction, particularly in, fund-to-fund realm, the passive realm, and so forth. I think diversity begets diversity, so we'll see if that's true over time as we continue to look at this data. One thing we didn't talk about during our presentation that maybe you want to touch on, Madison, is how did we know who were men and women in the database?
Good question. So of the 26,000 managers that we looked at, I think Morningstar actually collects the gender of the manager on about 15,000 of them. And then for the remaining 10,000 managers, what we did was look at their first name. And then we used an algorithm from a number of different academic data sets that will give us the probability of being female based on the first name using census data. And so between that algorithm and a ton of manual checking using professional bios and LinkedIn and web searches of that nature, we were able to identify 26,000 managers' gender.
And because we were using first name and the way we store data in our database, that was somewhat limiting in terms of geography, especially in Asia.
Yeah, we had to exclude a number of countries because, like Laura said, we didn't store the names properly. They were translated into English a little bit incorrectly, so we wanted to make sure that we had a clean data set, so that's why we excluded China and Japan and Taiwan.
Okay. And those are, especially China, the fund industry is growing pretty healthily there. So
yeah, and we talked to our manager research team in China, and they actually mentioned that China would probably have a higher rate of female fund managers, just based on their anecdotal evidence, but we just weren't able to test that.
Okay, so that could be another project going forward.
Yeah.
Okay, well, I think we've covered all the questions that we had in the queue here. We will make the slides available to participants afterwards, as well as a copy of the full study as a follow-up. And if you have any questions, you could email me or Madison. Both of our emails are first name dot last name, so laura.lutton@morningstar.com and madison.sargis@morningstar.com. And we'd love to hear from you on this issue.
Thank you very much, Laura and Madison. We'll conclude the call for this afternoon. Thank you all so much for joining us.